Hey guys, Gabe with Scenic South, and I'm here today with Carrie, and Carrie is with Community Mortgage. Carrie is someone who has not only helped some of my clients, some of the people I've sent over to her, but she's also helped me a ton. Actually, that's how I met Carrie. I was looking at some stuff in my personal house, and even though I've been in the world of real estate in terms of investment property for over a decade now, and have a lot of friends in the industry, Carrie was one of the ones that was able to help me out and answer my questions a little bit more direct. So I really appreciated that, and so as I've gotten into more and more listings and things of that nature and become a realtor, I refer a lot of people to Carrie. She's one of the primary referrals that I send out. So today we are at 1814 Knickerbocker, and we're looking at this house, but we're going to discuss a couple of things first before we get into the specifics of this house, just to kind of understand where the market is. A lot of people have questions and they're trying to understand where the market is, what it's doing, how are rates going. There's nothing on the MLS. Why is that happening? Well, the reality is that's a pretty big deal, and it's a combination of not only are the properties that are out there going quickly because there's a lot of buyers, but the other reason is, the main reason why the buyers are there is because the rates are so great right now. So we'll chat a little bit about that, and also think about if you're thinking about the refinancing or something like that. That's also, it's a good time for that as well. And we won't really get into details of that today, but just keep that in mind. And if you have questions in terms of the refinancing, you can obviously call Carrie. And Carrie, I'll hand it over to you to introduce yourself and give your phone number and all the good stuff about you.
Hey everybody, my name is Carrie Harper. I am with Community Mortgage. I love to help first-time buyers or people who need to refinance and have lots of questions. I'll be more than happy to run numbers for you. I do like to discuss when you're buying a home, not what you're qualified for, but what you are comfortable paying each month. That's really important. And we discuss different terms like escrow and things like that. Any question you have my cell phone. My cell phone is 423-240-5200. You can call me 7 days a week. So anytime you have a question, you can shoot me a text or give me a phone call. My goal is to get back to you within 30 minutes. Most of the time I hit that goal. So you give me a call anytime and I'll be able to answer some questions for you.
And we'll have her number on the screen, so you guys will be able to see it in case you didn't catch that when she said it. But I will say that I'm confident to tell you that she will call you back any day of the week, because I have personally texted her, and you know, it's been the whole, you don't have to answer me now, you know, because I feel bad, because realtors never stop working, but I don't expect that of a mortgage broker, so I'm just
I never stop working.
So yeah, so I go and I'll tell you, you don't have to answer me now. I go to 10, 15 minutes probably, I usually get something back from her, but I don't expect it, but it's there. So I do appreciate that, and that is one of the reasons that I do like to give people your phone number, because I do know that you are going to have that and return that call.
Well, I know the questions are important and they're fresh on your mind, and I'm going through the process right now. Like I told Gabe, I'm building a house, so I know the pressure, and I'm in the business, and I still have, oh my goodness, moments. So it's so nice to be able to call somebody or text somebody and saying, okay, I'm freaking out about this, can you help me? And usually, yes, I can help you, and if I can't, I'll find somebody that can. That is my goal. I never leave your question unanswered, ever. So you give me a call anytime.
Yeah, that's really true. So, and like I said, I've been the recipient of that. So, that being said, I want to jump right into it. And one of the biggest questions right now that people have is, what are the rates? So I get that a lot. When clients call me, they're like, well, what are the rates right now? And I, inevitably I have to tell them, I'm not a mortgage broker, so I don't know, and it fluctuates so much, it's hard, so I will say that if you guys are watching this video and you're going through the process, 9 times out of 10, if you ask your agent what the rates are, we can sometimes answer. Like if I have a fresh conversation with Carrie, I can sit down and tell you, hey, when I spoke with my mortgage broker today, this is what I got, out of the conversation. But 9 times out of 10, we're not the ones looking at rates. it's best to call the mortgage broker. Get it straight out of the horse's mouth. Don't try to go around it. As realtors, we try to help you as much as we can. We try to answer as many of your questions as possible. But sometimes you want to go to the expert in that. So I do want to talk a little bit more about where we are today. This may change this afternoon. It changes as quickly as that, right? I mean, we can be talking about this, and it can be changing as we're talking. So it can change, but as of, I guess, last night when we pulled some numbers and looked at some information, there was some rates. And so what is that looking like right now?
So asking the blanket question, what are the rates today? It's kind of a loaded question because rates are based off your credit score, how much you're borrowing, what type of loan you're doing. So it's not just a blanket answer. Just like, for example, for this home, which is going for $339,900, so the rates, if you have a 750 credit score, the rates for a conventional 5% down is 2.625. Where if you go FHA, which is 3.5% down, it's 2.25. And that was us yesterday. And again, most people don't understand that rates are based off the stock market. And you watch the stock market move up and down all day long. Most of the time, rates will move up and down every day. I don't know from one day to the next what it's going to do. A lot of it is based off what happens in the world. And so we don't know. So it's good to ask that. I'll ask you specific questions so that I can kind of pull and see where you might be that day. And then you'll hear us say, we're going to lock that. Well, once you get a contract that is signed, we can lock it. That means that rate is yours for the life of your loan. It will not change. It's a fixed rate. So that lock, regardless if rates go down or if they go up, yours will always stay the same. We cannot relock that loan, or we cannot change the lock if it goes down. So I always ask you, are you ready to lock? And with the market being as volatile as it is right now, lock it. If it sounds good to you, lock it that day, because tomorrow it could be 3.5. So even though that is still a good rate, we're at historic lows, and we don't know how long these numbers in the twos are going to stay with us. So if you're even thinking about refinance, now is the time.
Right, and that was one of the things that we obviously, like I mentioned earlier, refinancing is a big deal. I know that a good friend of mine gave me your number, and he's working on the refinancing and stuff like that. And by the way, he's been, raving.
Yeah.
He's been very excited, and he's not an easy person to please. So that being said, that's great. But yeah, it's insane. The other thing I wanted to point out was you had mentioned to me earlier when we first walked in here was that based on your research, you were looking at, and again, this isn't concrete or set in stone because there's no way to tell what's going to happen.
Correct.
We're not, if I can predict the future, I'd be in a different business. But that being said, you were saying that it doesn't look like come November things are going to change much.
We try to keep up with the experts, and they try to predict as much as they can.
Right.
And it looks like we're going to stay in the twos. We're hoping, fingers crossed. We don't know after the election. Everybody knows there's 1,000 things that can change.
Absolutely.
So, but it looks like if we're on trend, we should hopefully stay in the twos. And that's what we're all hoping for. And because there's a lot of, the market is tough right now. Multiple bids, almost every house within 4 hours of the house going on the market. It's just very competitive. So
yeah, it's very aggressive.
Yeah,
for sure. And that might even be a bit of an understatement.
Yeah,
but, it's definitely something that we have seen a lot of where people. I actually had a client tell me that they were working with an agent previously, and they've been looking forever, but they're very particular, which is fine.
Right.
But they went to a house. They saw the house. Well, they had set up the listing or the appointment to go see the house. By the time they went to their appointment, the realtor, the listing agent, called the agent they were working with prior and said, "Hey, we already have the house under contract. If you want to see it and be a backup offer, that's fine, but it's already under contract." So houses are going very fast. So it is a thing of moving fast, which is one of the things that I will bring up. one of the things that I've had to kind of overcome and adapt to is the readiness. You say you respond in 30 minutes. Well, there's times where, obviously like every agent in Chattanooga has, we have the availability to send you emails on something that falls within your parameters as soon as it comes up on the market. Well, if it's something that fits what you want to do, if you reach out to me and say, hey, I want to see this house, I'm not going to wait till the next day to set a listing appointment. Or showing. I'm going to set up that same day to do that showing. Actually, if you're available in 15 minutes, hey, I'm going to call the agent. Screw the listing system, the system. I'm just going to call the agent directly, and if they need me to go through the system, I'll go through the system. But I'm going to make it a point to be the first one going through that house. Whether you like it or not, it's fine, but you get first dibs.
And then he can call me and get a pre-qualification letter within minutes, and that's really, really important because we talked about being pre-qualified.
Right.
And you can call me, and I've written, for some people, I think one couple, I wrote 10 pre-qualification letters, and we just change it to the amount they're offering.
Right.
And there's a strategy behind that. But I don't ever mind doing that. I will write as many as it takes. They finally got under contract yesterday, and everybody was just like, yes.
Well, and it's a very difficult market, and sometimes
It
you have to
really
get that aggressive.
It really is.
And the thing is, in real estate, it's one of those things that real estate is a very emotional purchase.
It
right?
is.
And we'll get into that now because we'll talk about your journey a little bit.
Right.
But it's a very emotional process, and so sometimes you find the right house, and the last thing you want to do is lose it.
Exactly.
But there's other times where, I feel like this is where, a good agent can stand apart is where, it's our job to sit back and say, I know you're desperate for a home, but don't settle for something you don't want. Or, hey, you're emotionally in love with this house, but, and I guess this is where me being a general contractor comes into play, where I can sit back and say, hey, but this house is going to require this much work.
Exactly.
Because yes, it's got great, windows or space or layout or whatever, but the foundation's falling apart, or there's some hidden secrets that you don't see that I do as a contractor. So I think it's a very big thing for the realtor to be able to be the level-headed person that's kind of guiding that client. We don't make the decision for you, and we do whatever you tell us to do, but we're here to be a guide.
Right, and I'll do the same thing on my end. They'll say, well, do you really think I should get an inspection? By all means,
yes,
always get an inspection. It is the best $300-400 you will spend in your lifetime, because there are so many things in a house that can be wrong that you can't see with the naked eye. And that inspector, a good inspector, is trained to see that. You'll get a page. I mean, he'll even go and say, well,
I've gotten 15,
it's
20,
crooked, something's crooked. Well, so what? But I tell people, look for plumbing, look for electrical, look for foundation. Those are your 3 biggies.
Yeah, and that's something I do. Yeah, I do that as well, because and a lot of my clients will ask me, they're like, well, if you're a general contractor and we're using you, should we get a home inspection? Right. I get that question all the time, and I say yes. Because you see me, I'm in a blazer, I'm not going to go through your crawl space. I love you, but not that much, right? Like, I'm not going to go through a crawl space.
And I have questions all the time. Is it required for a mortgage? No, it's not required. I mean, it's your purchase. Right. But just know, if you don't get one and something is wrong, you still own that house. You are still
Well, and FHA, they're going to come out and they're going to say you're an inspector. So it's nice to sometimes have that inspection ahead of time and say, oh, you know what, we need handrails. How many times do you see handrails on an FHA?
Almost every time.
Exactly. So, and it's maybe a $300, $400, $500 handyman fix.
Right, exactly.
It's not even anything
Sometimes
crazy.
it's a $50 fix.
Yeah,
I've even had it to where they said, okay, we need fire detector or smoke detectors. Well, that's like $25 at Home Depot, but it's got to be mounted and they have to see it. And FHA too, don't rely just on FHA and USDA appraisers, because they don't go up under, 9 times out of 10, they don't crawl up underneath your house and look at the foundation. They'll glance at it, but they don't really look at every
They do the kind of
socket.
inspection I do.
Yeah, I mean, they glance at it and go, hey, this looks good. But they don't go through every socket, every plug in your house where an inspector does and say, okay, this one is grounded, this one's not. And that's so very important to look at. And they look, I mean, like an inspector really looks at every pipe in your house, where an appraiser turns the faucet on and says, yep, water comes out and it's not brown, great. And then they just turn it off and say, okay, plumbing's good. So that's really important, and those are the two differences, because a lot of people ask me, are those the same? No, they're not.
Mm-hmm.
And I give the example, an inspector will say, well, that door is not hung correctly. An appraiser goes, yep, there's a door. And so it's two totally different things. Right. It's really important. Best $300, $400 that you will spend ever.
Well, let's look at it from the perspective, right? So a home inspector works for you.
Right.
An inspector for an FHA or something like that works for an FHA.
Correct.
They don't work for you. So they don't care necessarily about what you're buying. They just want to make sure that it's in livable condition.
Exactly. So
that if something happens and you default or something to that effect, they can resell the house. Right? And they want to make sure that it's habitable. They want to make sure that it's enough condition where you can live in the house. Versus a home inspector's there to work for you. You're paying them to turn around and tell you everything that's wrong. And sometime throughout the process, we'll definitely sit down with the home inspector and get some questions going also for the channel. So that being said, I'm going to kind of switch it around a little bit from our agenda, but we did touch on the pre-qual versus the pre-approval and things of that nature. And so in the world we're in, normally, again, there's a difference between the pre-approval and the pre-qualification. But in the world we're in, there's just way too much going on for a lot of mortgage lenders to get you a pre-approval. Right. And it becomes very, very complicated. It is. So a lot of times what's happening is people are doing the pre-qualification letter that says, hey, yeah, this has been, but not all pre-qualifications are equal. And I'll say that because in one of my personal flips, we had a deal fall through because the person purchasing, they were pre-qualified, and when they went through the pre-approval process, he was 1099. And he didn't have 2 years of
gotta have 2 years for 1099.
Right, so we ended up having to relist the property. Right. And so that being said, not all are equal. And so one of the things I want to point out is that, as Carrie and I talk about it, or talked about it prior to recording the video, was we were talking about how she does it and how she approaches pre-qualification, and how she goes a little bit more in depth than what a normal pre-qualification process would. So just kind of, I guess, break that down in terms of, the things you would ask for. Right. So if someone watching goes to you and says, hey, I need pre-qualification, what are you going to ask them? What's your kind of list of the things you need to ask
them? One of the things is, what kind of income do you have and how are you paid? Are you paid W-2? Are you paid 1099? And if you have those, I would love to see them. Because 1099, it may look like you make this amount of money, but if you write a lot of things off on your taxes, I have to go by what your gross income is. And it may look like, you made $100,000, but you wrote off $75,000 of it, and that's great. You don't have to pay taxes on it, but I can only I can only see that you made $25,000, and that's kind of the way it works. You have to be careful with that, especially if you want to buy a house. Yes, you do have to do 2 years.
I think that's the war, right?
Yes.
That a lot of small business owners
very
go
through,
right?
So.
Because I've been doing this for 10 years, or over 10 years, and that's kind of been the war. Mm-hmm. How much do I want to write off versus how much do I want to keep as income to be able to approve for certain things that I want? Because it's credit can be a tool, and then it's very difficult because if you don't claim enough because you don't want to pay taxes, then you can't approve for anything else. So, there's definitely a balance to that. If you're a business owner, and to break down W-2 versus 1099, the easiest and the simplest way to say this, there's exceptions to the rule, but the easiest way to know this is if taxes get taken out of your check, your W-2. Right. If you do not get taxes taken out of your check, you're usually 1099. That's kind of the rule of thumb. So if you don't know the difference between the two or how you're paid, that's kind of the rule of thumb.
And you can always call me and let me look at it, and I have
with a tax return.
Formulas and everything else and kind of tell you where you are. Also, if you're 1099, any type of 1099, you have to be that for 2 years so that we can see 2 years of taxes.
Well, and
we take an average,
with that income. Because that's what happened on ours, right? He had been 1099 for 3 years. First year he was like at 10,000. Second year he was like at 25. Third year he was like at 80. Yeah. Well, what happened was, he approved for the house because of the 80, but he had 20 and 10 the years before. Right. So we couldn't use it.
It
even
hurts.
though, right.
It hurts.
And you couldn't approve.
Right.
So,
And it goes for overtime and commission too. If you are overtime and commission, and you don't have that for 2 years, we cannot count that money. We have to just go by your base. So you may have a very small base and get commission or bonus, and you really make good money, but if you haven't done it for 2 years, unfortunately, the law states that we cannot use that commission or bonus money. So there's a lot of tricks of the trade. If you're W-2, let's say you started your job and you're W-2 and you haven't been on it 2 years, but you work 40 hours a week, you're guaranteed 40 hours a week, we can get a letter from your employer stating that. We don't care if you've been on a job for a month. As long as you've got that guarantee letter, in most cases, there's always an exception to the rule.
right.
Always.
Well, I'll give you an exception. My wife worked W-2 in my company, right?
Right.
If I write a letter from my wife, it's not going to be that much of, because they're going to sit there and say, yeah, you'll write whatever you want.
Exactly. Family is hard.
You know,
I will say
right.
family is difficult.
Again, regardless, it's one of those things where for proving my wife, I have to have her under income for a lot longer as W-2 before they can get a kind of a letter from me and say, yeah, this is, a legitimate letter and not just the husband trying to get the house that he's going to live in anyways under his wife.
Exactly.
So
and there's always an exception to the rule. But if you work for a corporation and you work 40 hours a week and you're a W-2, say you just graduated from college and you now have a great job, hey, kudos to you, that's awesome. The thing we'll need is we need your school records. Mm-hmm. We don't care if your grades are good or bad, I promise. But we just need to see. We just need to see that yes, you were in school and that you were doing something. You weren't sitting on the couch playing video games.
Right.
And then all of a sudden you have a great job. Well, that's a little fishy. So if you're improving yourself, that's great. Right. And we just need your transcripts. Right. They don't have to be official transcripts, by the way. A lot of people say, oh, that costs money. Just call the school and get unofficial transcripts. They'll email it to you. So that's fine. We just have to show that you were doing something. So. Right.
So now we talked about obviously taxes and income.
Right.
What's another one of the questions you might ask in the pre-qualification process for someone?
How many dependents do you have? What kind of down payment do you have? Do you have a down payment? There are some programs out there that will help you with a down payment. Tennessee has one. And then there's also a program called USDA. There is no down payment for a USDA. However, there is an income cap on that, and it's based off the number of dependents. And yes, if you have a 16-year-old who has a job, you have to consider their income. So that is very important. That goes for THDA as well. So you need to really, anybody that lives there on a permanent basis and they have an income, that is part of it, regardless if they're buying it or not. Like 16-year-old's not going to be purchasing a house. However, you have to use their income.
Hey guys, Gabe here, and I wanted to thank you really quick for watching our video. We hope it's informative and we hope it helps you. As we create this video and other videos for you to enjoy, we ask that you like it, you share it, and you let others know that we're here to just pass along information. So as you're watching this, please remember we're here to help you. If you have any questions beyond this video, feel free to reach out to me at 423-443-7213. Again, that's 423-443-7213. We're here to help you, and we look forward to sharing not only this video with you, but more videos to come in the world of real estate. We hope it helps, and we hope we make your journey a little bit easier by providing you some very useful information. That being said, let's get back to the video.
Just because you qualify for a certain amount of money based off of your income, we don't see how much you pay for food. We don't see how much you pay on gas or clothes or things like that. So you need to consider that, because those, I don't look at your electric bill or your water bill or cable. So consider all of that when I'm talking to you, because I will ask you, what are you comfortable paying with monthly? Because that is more important to me than what you're qualified for. because just because you're qualified for it doesn't mean that you feel comfortable with that method.
And that's what I was going to tell you. I mean, I know in a case of someone that we know as well that I know that works with our company, and I referred her to you.
Right.
One of their issues was they had immaculate credit, I believe, but their debt to income ratio sucked.
Right.
I mean, I think it was like 50-50 or something.
Yeah.
And their debt to income ratio was horrible. So that's one of the things. And I will say this, guys, like if you guys are going to sit down with a mortgage broker, and again, obviously, Carrie's someone I refer, but if, regardless of who you're sitting with, be honest. Like they're not there to take away the house from you. They're there to make sure that you don't go through this emotional roller coaster of wanting to buy this house, and then when you actually get to that point, you're wanting to put a contract in the house because you fell in love with it, and it's like, I'm sorry, I can't get you your letter because you lied to me.
Right.
And now you have this issue that wasn't brought up initially, but it's there now.
And
so
we find stuff like that all the time.
Yeah.
And trust me, you
And it
can't
sucks
hide
for
it. You cannot hide it. The government, it's really for your safety, because we are trying so hard for you not to foreclose on a house. We don't want you to lose the house. We want you to have the house. I personally, it is my mission to get you into a home. It's not a house for me, it's a home.
Right.
And I want you to be in that home and be comfortable and happy. And I don't want you to lose this home. So the government, believe it or not, doesn't want you to lose the home either. So that is why they ask so many questions and want so much paperwork. It isn't that we're being nosy. We just want you to be safe. And that's what happened in 2008, is people were not doing that, and they were just loaning whatever, and all these foreclosures. We don't want that again. It hurts the economy, but more than anything, it hurts you. And we just don't want that to happen.
Yeah.
We want you to be in a home, we want you to be happy, and we want you to be able to afford it.
Yeah, and that's the thing. Like a good friend of mine, he bought his house years ago, and he's about $8,000 from paying off his home. His kids aren't even. His kids are not even.
That's amazing.
Yeah, his oldest is in middle school, and he's $8,000 worth of paying off his house. That's great, because what happened? Well, he went for a mortgage he felt comfortable with, and as his wife got raised and as he got raised, they threw more towards the mortgage, more towards the mortgage. So now a mortgage that was supposed to be a 30-year, they've brought it down to 17 or 18 years because they've been able to throw some more at it.
Even we figured out one time, even if you put $50 against it, I think if you put $50 extra towards principal every month, I think if I remember correctly, it knocks off 5 years.
Yeah, that's insane.
That's $50. Okay, so don't go to
McDonald's.
Don't go to McDonald's 3 times a month, and then there you go.
Yeah.
It is truly amazing what the tricks. And if you ever want to know a trick or anything to pay off your mortgage, say you don't have a mortgage with me, but you're trying to figure out how can I do this a little bit better, call me.
Yeah.
I'm more than happy to sit down and talk with you. And it may be refinancing and getting the low rate right now. I mean, I locked one in yesterday. They had great credit. They didn't know a ton, but they owed quite a bit. We locked it at a 15-year at 2.25.
Wow.
So, and like I said, that's not always the way it's going to be, but that was their situation. So,
well, and that's the other thing too.
I'm here to help you.
Yeah.
That's what I'm here for.
You hear a lot of times where people refinance and they get all this, you hear all the time, well, we got these people all this extra money.
Right.
Well, it's not necessarily you got extra money. In some cases, you can have extra money.
Right.
But in most cases, you didn't really get extra money. But what you did was you saved so many thousands of dollars
You really did.
online that it's extra money. And again, and if you were paying a mortgage, let's just give an example. You were paying a mortgage of $1,000 a month. And out of that $1,000 a month, now you've essentially gone and refinanced, and your mortgage is $800 a month. You still feel comfortable paying that $1,000 a month. You got a better rate. Yeah, you got a better rate. You're probably doing it in less time anyway.
Right.
Well, now I would just go ahead and keep paying those extra $200, take it off of the principal, and before you know it, you're paid off maybe even 10 years earlier than, or 7 years earlier than what you would have. So again, I'm throwing numbers out there that I don't know about.
And when you're buying a home, you have to see it as an investment.
Mm-hmm.
Just like you see an IRA or you see a 401k. Your home is your investment, not just in your family, but in your financial. It's one of the biggest purchases that you will make in your lifetime It's a huge decision. So don't make it lightly. And like you said before, earlier on, if you don't compromise. If you don't walk into the house and say, I could live here, and you continuously think about it, it's just like a marriage. If you don't continuously think about that other person, don't do it.
Yeah.
Don't compromise. There will be a house, like a friend of mine, she just got that house. They have bid on, I can't tell you how many houses, but they have fallen in love with this one, and this one's better than any of the other houses they found.
Yeah, and that's it, right? So we were talking about that earlier as well, in terms of, you talk about the asset, and you talk about how it's one of the most, but we're sitting here at Knickerbocker, and we just talked about earlier when you were growing up here, you were like, why would anybody want to build a house in this neighborhood?
It's amazing.
So versus now, we have new construction right down the street. Yeah. We have houses going for, you're less than 2 miles away from the Market Street Bridge and the, the walking bridge. Yeah, you're right next to downtown. It's a very desirable area, very desirable location. And so, but if you would have bought this house 20 years ago, you probably would have bought it for what, 60?
Oh yeah.
Best. It's a we're listed at $339.9.
Yeah.
So if you think about that, and that's not everybody's scenario, and I'm not saying this house is going to be $600,000 in future, but I'm not saying it's not.
It's not going to go down in value by any
Even after, it's crazy because when I first got into the industry here in Chattanooga, it was again 10 years ago, it was around 2010. We started flipping. We did a lot of houses in Brea.
Right.
And I remember that, we were buying for a lot less than what you buy for them today.
Oh, yeah.
But I remember we were selling, and we were in the low hundreds when we were reselling the houses. Well, those same houses that we sold for $120,000, $130,000 are now going for $150,000, $160,000. 170 even in the Brainerd area.
Yeah, I mean, right, so, 200 in the Brainerd area.
I remember Highland Park.
Oh, yes.
I used to look at houses in Highland Park that were going for $15,000 and $20,000. Like, I don't want to touch Highland Park.
Exactly.
10 years ago. Exactly. You go to Highland Park now, you're lucky to find something in the 200 range.
Exactly, and that's a good thing.
Yeah, you're lucky. So again, understand it is an investment. It is something that you're doing to move forward.